Good afternoon from London. I am Johanna Ryan, and I am the Global Director of Impact for Vision Fund International, which is the microfinance arm of World Vision. And I know that a lot of you in this audience will know a bit about Vision Fund. Right now, we're working in 28 countries, and we have a portfolio value of around 435 million, focusing mainly on the rural and poor. Now, like many financial service providers, that number would have been different if we were talking about January this year. And in this session, we are going to be looking at the effect of COVID-19 on financial service providers and their clients over that time, and what actions the institutions have taken to cope with the pandemic and the lockdowns and other restrictions related to the pandemic, but also, very importantly, what actions have their clients taken to cope with the effects of the pandemic. Now, things have changed really rapidly over the last month, causing significant changes to growth forecasts the world over. And most recently, I came across some statistics from the World Bank revising the number of new poor in the year 2020. It calculates that about 220 million people will fall below the international poverty line of $5.50 a day. 257 million will fall below $3.20, and 131 million will fall below $1.90, the measure of extreme poverty. And these are unimaginable numbers. Yet we have here a panel to help us make sense of the implications, both for the individuals and the financial service providers that are supporting them. We'll hear about the findings from an extensive survey of financial service providers, and we'll look closely at the experience of Vision Fund Ghana and the stories from their clients. So I'm going to ask my fellow panelists to introduce themselves, but first of all, I would like to explain that we had something of a connectivity problem with our rural branch in Ghana, and therefore we have a very last minute asked Nelly to join us instead of Regina, who was originally listed on the program. So Nelly, may I start by asking you to introduce yourself, please?
Thank you, and good morning to everyone. My name is Nelly Kodo, the Human Resource Manager for Vision Fund Ghana. Thank you.
And Nelly, I think that you've worked in the field a great deal and know what it's like to be supporting clients in the rural areas.
Very true, Johanna. I have worked as a branch manager and worked as a social performance manager, and I assumed the role of a HR only a month ago. Thank you.
Okay, thank you, Nelly. And next to Nelly is Frank. Would you please introduce yourself?
Yes, hello, hi, and good to see everybody. My name is Frank Alonu. I am currently the interim CEO of Vision Fund Ghana. Prior to this role, I've been in partnership. I've also been in operations. I've worked with branches a great deal for the past 30 years. And so it's good to be on this call and also to share what we are experiencing in Ghana. Thank you.
Thanks, Frank. And I'm going to move on to you, Anton, now. And perhaps, Anton, after you've introduced yourself, you would please give us an overview of the survey that will help us understand what's happening very generally to financial service providers and especially their clients. Thanks, Anton. Over to you.
Yes. Good morning. Hi, I'm Anton Simanowicz, and I'm Director of Customercentricity for the Social Performance Task Force. And I'm going to talk to you this morning about the work that the task force has been doing to take a customer-centric view of the COVID crisis and really sort of start by connecting to clients and supporting financial service providers to collect information about their clients and to really understand what is happening to them during the COVID crisis, and really segmenting and really thinking about the differences between different client groups and what that understanding can help us do. So as I say, the Social Performance Task Force has supported providers through the client interview tool, which is a survey which has been provided to providers around the world in partnership with 60 Decibels and Finca International. So this is ongoing. We've worked in about 22 countries so far, a range of different continents and regions, different types of businesses, different sectors. And that information, as I say, has been primarily used by providers for themselves to understand their own clients, but we've also collated that information through a dashboard that's available internationally. So I'm just wanted to talk through a little bit this morning about some of the data that's coming out of these surveys and what that means for providers, what it means for clients, and what it means for how we as a sector can respond to the crisis. So I think the first point to say is this, the same storm, different boats analogy that we hear. Yes, everyone's being affected by COVID, but the situation and the impact is really different. It's different for business sectors. Services are affected much more than other sectors. Agriculture has been affected in a very different way. But it's also very different for different types of clients. If we look at women, for example, women are affected much more. Poor people are affected more than less poor people. Youth are often affected more. And the types of impacts that we've seen through the impact of lockdown, etc., I think we're all very familiar with. Loss of income, people's income, business incomes dropped. But we're also seeing big impacts in terms of food security, increase in hunger, sale of assets, reduction in savings. And on this slide, for example, it's very striking that the impact on food security for women is significantly more than for men. 32% of women overall going hungry compared to 22% of men. So I think that's what we're all familiar with. We know that the crisis has had a big impact. We know that lockdown really affected the businesses that we're working with. It's really affected the livelihoods of clients that we're working with. And we know that it's affected people in lots of different ways, and it's actually understanding the differences between different segments is important. I think what I want to really stress now is moving forward. What is the situation? So I think one of the key things we've been doing with the survey is to not just do a one-off snapshot of the situation during lockdown and the peak of the crisis, but to look at what is happening now as things evolve. And what we are seeing is that actually it's not a short-term crisis and a rapid bounce back. Yes, economies are rebounding in many ways, but if we look at the clients of financial inclusion, microfinance, we see that many clients are still deeply affected, that their incomes haven't come back to where they were. And so we're seeing in the second round of data that for many countries, things are actually worse than they were in the first round. Obviously, that is varying. And most importantly, I think we are seeing increase in vulnerability, the loss of income, erosion of savings, starting to see people selling assets means that this is not just a short-term impact, that incomes are not back to where they were, and savings, fantastically, people have drawn down on their savings to cope with the crisis as we hoped they would. But they are now, in many cases, in many countries, left in a situation where they don't have those savings to fall back on. So if we're thinking about going forward into the future with increasing vulnerability, we have a real challenge in terms of where things are. We have a challenge in terms of vulnerability. We have a challenge that the bounce back is not happening as fast as we might hope, and that people's income is still affected. We have a challenge in that clients need recapitalization. They need to restart their businesses, but they're in a more vulnerable situation. So organizations that lend based on savings balances, for example, mean that people are not necessarily entitled to the credit that they might have been entitled to before. So that's really what we're seeing coming out of this survey. Big differences between different clients, big impacts on vulnerability, and big questions for how we move forward as the crisis continues.
Thank you very much, Anton. So much of that resonates with me, working in the head office of Vision Fund and looking over 28 different countries and their individual experiences. But one of the things that I think I'm particularly interested in is, how have you seen the financial service providers balance what is true financial risk to them with protecting their clients?
So I think that's a key question. So obviously, I think up to now, a lot of the measures that people have been taking have been short term. It's been the moratoria, giving people space to not to have to repay the loans over a period of time, but very often the interest has been accumulating. So obviously the debt and the implication for the clients has continued. Organizations have been thinking about recapitalization. So obviously that's key for many clients, that they need to restart their activities, but obviously there's a risk there that if clients have eroded their savings, if their incomes have fallen, there's an over-indebtedness risk that our client's going to be able to repay their loan. So I think the critical thing here is to recognize that vulnerability, recognize the flexibility that's needed, that as I say, clients are not all in the same boat. There's very different situations. So we've heard of organizations, for example, 4G in Kenya, where they've changed their risk-based approach. So they're changing the ways in which they are assessing people's capacity to repay, assessing the risk of lending, and changing the algorithms and the way that they assess that. So I think that there's a need for data, for information, for understanding the situation of clients, understanding the differences. There's a need for flexibility, not just to apply old policies in terms of repayment rates and penalties, etc., but to be actually aware of the situation individual clients are in. There's some organizations are supporting clients to diversify. Obviously, the sector's not affected uniformly, so there are opportunities. It's not as though that every business has collapsed. So helping clients to identify where those opportunities are, to support them to maybe reskill, repurpose their businesses. As I say, the timing is important. So giving people the space and the time to recover. But also, obviously, one of the things we've been doing as a task force is having dialogue between providers and investors. Because in a way, the clients are the foundation. We need to support clients to rebuild and secure their livelihoods. But FSPs need to be flexible to support that. But then the investors need to be flexible to support providers. And up to now, we've seen most measures have been fairly short term. But as we go forward, I think there's a need for more time and space and flexibility.
Okay, there's an awful lot there, Anton. At the end, perhaps when we're wrapping up, if there are any particular recommendations that you would like to share with this group, then please be prepared for that, or please think about that for us. So, Frank, I'm going to come on to you next, please. So if you could just take yourself off mute. You've heard about the extensive difference between the difference in the effect on financial service providers around the world, and there are quite a lot of differences shown in those slides that Anton had up. And we know that parts of Ghana went into lockdown and therefore you've seen the same impact on your clients that Anton's told us about. But can you tell us, Frank, how as the CEO of a financial service provider, you've seen this crisis develop over time?
Well, thank you, Joanna. I think that to better answer this, I would rather put it into context to look at how the whole thing migrated or worked around Ghana. The first thing is that in Ghana, we experienced the first 2 cases in the month of March. So we saw first 2 cases on the 12th of March. That is when the first 2 cases was reported. And within the short period, the cases grew very fast. By June, we had about 16,000 cases. So immediately you realize that every institution went into more or less like a panic mode, where you realize that the reality has dawned on us that things are not normal as it used to be. By June, as I was saying, 16,000, we had about 161,000 businesses closing in country. So with that alone, you realize that almost everybody was panicking. Financial service providers were looking at more focusing on survival as against service delivery to clients. So everybody was cutting back. Institutions were cutting back on disbursement. Institutions were looking at focusing on their cash flow to be able to meet the day-to-day needs of their staff, and also buying personal protective equipment to support their staff in that regard. So we noticed that these were some of the changes that we see. And also from the regulatory side of things as well, the regulator, who is the Bank of Ghana, also came with a number of directives to ensure that institutions fall in line, you do not collapse, you are cutting back, you are resolving your survival as against the service to clients. So we saw that even number of disbursements had to slow down. Every institution was looking at that angle. Many were also cutting staff and all that. So all this affected service delivery to clients. It's also affected even staff in the institutions, how they were working around that. So those are some of the things that we see. And so it is more about panic mode. It's more about how do we survive, and not more even focusing on how to serve clients in that regard. Yeah.
Right. So, so what you've described is the kind of activities that financial service providers were taking in Ghana throughout this period. Were there specific things that Vision Fund Ghana found you had to do, maybe because you were working in rural areas, or anything particular that happened that you'd like to relate to this group?
Yeah, so rightly so. As an institution, and as we focus on rural Ghana, we noticed that there was more that we need to do. Even the level of education for our client to understand that COVID is real, and it's something that we need to be careful about. Okay. Because when you go into rural areas, most of them felt that, well, this is a urban setting disease and had nothing to do with the rural setting. So we had to take it upon ourselves to be involved in educating clients. That's number one. Secondly, we're also involved in making sure that normal personal protective equipment are used by our clients. So as an institution, we even went into distribution of face masks to our clients. And then once we do that, we also encourage them to wear it, and to ensure that even our staff also who engage with them also wear this mask before they engage, so that clients are informed. And then beyond that, we were also trying to help businesses in the rural settings as well. So the question was that there were some businesses that were directly affected by COVID because schools were closed, so those who were related in those value chain couldn't work. We also had a situation where, because of the closure of the borders of the country, so those who were importing even goods to sell couldn't get all those things to sell. So what we did was to try to identify businesses that were flourishing in the midst of COVID, like those with personal protective equipment and all that. So we linked them up with our clients who are into trade, so that these ones can produce those like face masks and all those things. Once they produce it, then they will give it out to those who are into trade, so that they can also trade and be able to survive. So those are some of the things that we identified that we were using to help the situation, especially among our clients who were in the rural settings.
Yeah, I remember very well back in March, just feeling sitting here in London, that things felt so chaotic. I mean, as the CEO of a microfinance institution, just keeping all those plates in the air must have been extraordinary. And maybe a sort of personal question for you, Frank, is that as a CEO, what have you learned about managing through a crisis that you would be able to take forward if such a situation were to arise again?
Okay, thanks so much, Joanna. I think that the first thing that I have learned is the fact that in crisis, you have to run an institution that is always prepared for such a situation. So a recovery plan must be ready, tested, and very much ready to run with should anything like this happen. Also, you need the board on your side in times like this, because in crisis, you have to always have some policies that you need the board's approval on as quickly as possible. So in this case, for instance, what we did was to ensure that the board is well engaged on day-to-day happening in the institution, so that when you go for any policy change and all those things, they will be ready to help you on. Then the third one is also about leadership. I felt that it is always important that the leaders of the institution keep a cool head, because in panic situations like this, the staff will be looking up to the leadership to see where are we going and what is going to happen, because institutions are collapsing and people are thinking about personal survival. So if the leadership is also not calm, and then also ensuring and assuring teams that yes, we will overcome, and we realize that people begin to make mistakes, and people begin to think about in a panic situation not following protocols and to survive. So leadership also needs to show the way by being calm and ensuring that they reassure the teams that yes, we will survive it by following the key protocols as we go. And also, I think that the other thing which has helped us so far is the fact that we make sure that there is constant exchange of information among the teams. So regular exchange, making sure that every staff of the institutions is informed about where we are going, the trajectory, what is going to happen. Even when we are talking about managing and cutting costs, it shouldn't be just leadership deciding, but you need to engage staff to let them know this is the realities and what can we do to help the situation. So staff being involved, the board support, and also keeping a cool head in moments like this helps the situation.
That's a wonderful,
so that is something that which I think will carry through going forward.
Yeah, that's a wonderful summary. You could see me taking a few notes there. May I just remind this group, please, all these participants, that we are going to have a session of question and answer coming up. So if you'd like to put your questions in the chat, then we will come to those quite shortly after we've heard from Nelly. So please feel free to ask questions of any of the participants. So Nelly, on to you. Could you first please tell us a bit about the branch that Regina, the branch manager who was originally going to be here, could you tell us a bit about that branch? I know you're very familiar with it anyway.
All right.
Hello, Nelly.
Thank you so much, Johanna. Okay. So the branch is Kumasi branch. This is situated in the southern part of Ghana, specifically in the Ashanti region and in the city called Kumasi. It is located in a way that the branch serves both rural communities, semi-rural communities, and urban communities. Currently, the branch is serving over 90% of women who are into trade, who are into service, and who are into manufacturing. The good thing is that they are working with groups, self-formed groups, savings for transformation groups, and individual borrowers in the branch.
Quite a range of clients at various levels of poverty, because the members of savings groups would be very poor indeed, perhaps living in extreme poverty, and then individual borrowers would be at a different level of income. But is there perhaps, Nelly, a story that you've got about a particular client, and perhaps you'd give us the client's name, that actually illustrates how the client has been affected over the period of COVID-19, both the original crisis and then as Ghana has emerged out?
Thank you so much, Johanna. I want to share a story about Araba. Araba is a fish seller. She sells smoked fish. What Araba does is that she usually buys stock from Cape Coast, which is in the central region of Ghana. So on the eve of the lockdown, she happened to be in Cape Coast to get stock of fish. Practice-wise, she would send this stock on a truck back to Kumasi, which was affected by the lockdown. So Araba got her stock, got it transported to Kumasi in anticipation that the next morning she was going to hop on a passenger vehicle to catch up with the fish and start a distribution. Unfortunately, that same noon, the lockdown was announced. So she couldn't arrive in Kumasi, yet the fish arrived in Kumasi. She got in touch with her sister to be able to sell the fish. But because of the lockdown, human movement was also restricted. Her sister couldn't contact the truck driver. The fish was left on the market. And for the period that the lockdown was in force, the fish got bad. And by the time the lockdown was over, she had lost her investment in that regard. Unfortunately, because she had lost her investment, she didn't have capital to trade. So she began to work with her peers in the market, and she would get stock from her colleagues, sell, make a little margin, and return the money. And that's how she survived. In some of the instances, staff who engaged her saw her predicament and even had to part with money so that Araba could feed her 4 children. There is this story also about Vida, who is a seamstress. She sews to make money, and she has some customers from the US and in the Europe. So in March, she got some orders. Usually she would pre-finance some of these clothes that she would make. So she got the order and was sewing for some customers who are going to be coming down to Ghana to observe some funeral rites of their relatives. Unfortunately, the COVID and the lockdown situations prevented the customers from coming down. And so her money was also locked up because she had gone ahead to make clothes for these customers. While she was imagining how she could survive, staff engaging with her showed her and recommended to her how she could go into sewing of nose masks to begin to make money for herself. And that's how Vida also survived and even maintained some income level for herself and her 5 children. In all this, the staff sat with them and had new payment arrangements such that they could pay out of the little income they were making. As we speak today, Araba and Vida are almost done with payment of their loans and getting ready to access new loans to expand their businesses. Thank you.
So Nelly and Frank as well, it sounds like Vision Fund Ghana has had to be very flexible with your clients. You're having to take each client's situation into context. There are no rules for the whole of your client base. You've got to take each one individually. Is that a correct summary?
That is very correct, Johanna.
Yeah.
Yeah. So tell me a bit then. Yeah.
Sorry. Yes, that is correct. But I also wanted to add that one of the first steps that we also took was to also cancel all penalties, which was to make sure that we do not put burden on the client. So once in the onset of COVID, we went to the board, we got approval to cancel all penalties on every loan so that we could now engage clients on a case-by-case basis and see how we can help.
Yeah, so those vital, quick relationships with your board to make quick decisions, that was really important during that whole crisis period, I would imagine. I certainly saw it at the head office, where we also were having regular meetings with the global board for exactly those, to make sure that we are doing things quickly and responding quickly. One more question to you, please, if I may, Nelly. Just generally, could you tell us a bit about how you managed your relationships with your clients over this period? It must have been extraordinarily difficult.
Thank you so much, Johanna. I think that's one thing that we have as an advantage as Vision Fund Ghana as that personal relationship we hold with our clients. And we ensure that we are very much interested in individual issues and we address them as and when they come up. So for some who are privileged to own telephones, we are in touch with them on telephone on a regular basis as a branch team, and even from a central point where customer service officers engage these clients and identify their challenges and table it before management for resolution. So on the branch side, they are constantly in touch, almost on a daily basis, just to know what is happening and to be able to be part of the process of coming out of the COVID and its impact. So this has been very much helpful and useful. And that is how come we have been able to identify their individual challenges and propose solutions to make this relationship a lasting one. Thank you.
All right, thanks very much, Nellie. There's one comment from Nancy Thomas, who reminds us that COVID-19 has impacted women more harshly than men, a greater burden of care, for example, and women working in the informal sector, therefore being the first to suffer a loss of income, loss of job. And I wonder, I'll start with Frank and Nellie, did you see any, have you seen any difference in the impact to men and to women during this crisis? And yeah, any observations on that note?
Yes, so it's true, because if you look at the setting, the home setting and the care for children, women play a very frontal role. And so you realize that you go into situations where you have the mother and then maybe a household, children of about 3, 4, and then the mother needs to take care of all this. I've seen instances where the mother can afford just one face mask, but he has about 3 children in the home, and you could see the worry about how do I take care. They are even more concerned about the children than they themselves. So you go to the street and you see that they are focusing on how to take care of the child. You do not see such things happening most around the male population. Not to say that they do not care, but their focus is more around business, the business must survive, whilst the women take care of both the business and then the children at home, trying to make sure that they are protected, even going out there, not mingling with the other people. Also important is the fact that now we have schools are closed. And so it brings in a more burden on the parents, especially mothers, to take care of the home, and in addition to take care of business and to make sure that the children are fed. At the same time, their businesses are also not flourishing as it used to be. So there's a much burden on the women fold in the country, as we have said.
Yeah, thank you very much. And Anton, the other part of this question, perhaps you have some thoughts about this, is what do we as a sector need to do to address the different effects on genders, as indeed was quite starkly shown in your slides?
Thanks, Joanna. I mean, yes, as you say, it's one of the things that's come out very strongly across the survey in different countries. I mean, I think the key point really for me coming out of these surveys, coming out of this experience, is flexibility, is recognizing the impact, and recognizing that there is a need to respond, as I think as Nellie was saying, in different ways to different clients and on an individual basis. I think what that means practically is recognizing that different businesses are affected in different ways. So a lot of the businesses that women have been responsible are going to be more affected than others. So looking for those opportunities, looking for the opportunities very specifically to intervene. So it's a very nice example from Sewa in India, where they recognize a particular problem with vegetable growers and their ability to get their product to the market, and they intervened to support transport. So put in organised for rickshaws and transport to market. And so this was a very specific place where they could identify a problem. I'm not sure if this case these were women farmers or not, but very likely they were. And say this group of people are particularly affected, understanding the nature of the challenge, and then thinking, is there a way that we can respond to that in a particular way? So I think that really is the key thing for me, is really at all levels is understanding these differences. So and then secondly is to make sure that the client needs are not blocked by policies, procedures, covenants, expectations that are going to get in the way. So recognizing that we are in a new situation, that the way that we operated before is not the way that we're going to operate in the future, and that expecting, sort of putting pressure on clients to repay on time, or putting pressure on providers to fit in with particular covenants to investors, is going to block the flexibility that is needed to respond in a more individualized way. So I mean, that's a very, in a way, a general point to your specific point around women, but I think we need to create the space to allow organizations to use the knowledge that they clearly have. Listening to Frank and Nelly talking about the Ghana situation, organizations know their clients, they know the situation, and can come up with ways to respond, but we need to give them the space and the flexibility to do that.
And key to all of that, Anton, is that financial service providers have to actively seek that information from their clients, and they have to actually analyze it as well to work out what's going to work for each client segment. It's not enough just to rely on anecdote. It really does take some active research, doesn't it?
Absolutely. I mean, I think one of the sort of shocking things in two ways from the survey was the scale of the impact. When we look at the food security impact, I think a lot of people got a shock that things were as bad as it was so quickly. The second thing that's coming out is the vulnerability, and even if we see the economy improving, even if we see people's businesses picking up, actually underlying that there's an erosion of savings, income is not back to where it was, that we are dealing with much more vulnerable clients, and that's not across the board. So women are going to be more vulnerable, poorer clients are more vulnerable, particular segments or particular sectors are more vulnerable. So we need to understand where that is so that we can respond to that. So absolutely, I think having good understanding going forward is really important, not just making assumptions.
Okay, yeah, thanks. And there's a question in the chat from Sam Mendelson relating to clients perhaps now tending to move back to money lenders and other high interest credit sources. And I'm going to start with you, Frank and Nelly. Have you seen any evidence of that over the last few months, that people are turning to money lenders again?
Yes, unfortunately so. In some of the areas where MFIs have gone into the survival mode, as I mentioned earlier, most of the individuals within the communities who are now lacking access to finance goes to most of this. But first of all, it normally starts from the normal borrowing from relatives who can afford to help. But know that because the impact is quite vast, a number of people are not having that to offer. So the next logical step is to go to those unfortunate money lenders who want to take advantage of the situation. So we have seen a few of that happening, and we have also heard a number of support. So the state or establishment at times tries to step in to ensure that there is some level of support, but it is not enough to go around a lot of people. So others also make do with other sources of support, which has to do with some of the unfortunate money lenders and all that. So we have seen a few happening in some of the areas where financial institutions are no longer operational. Yeah.
Yes, it's very sad that so much progress that we've made is being eroded. Yes, Anton, please.
Yeah, just a bit of a silver lining there, just relating to what 4G Capital was saying on one of our webinars, where they were talking about the Kenyan situation, and certainly yes, that many providers have stopped lending, but what they were saying is that the crisis has in a way opened many clients' eyes to the risks of borrowing. And that what they're seeing is people being much more cautious in their borrowing. So Kenya had a big over-indebtedness issue, a lot of competitive lending, a lot of oversupply of credit. And what they were saying now is that they think actually there's a positive, that clients are realizing that the risks about credit, and they are becoming more focused on using that money productively. So that was a really nice positive story to hear.
Yeah, indeed. So I'd like to encourage participants, please, to put your comments, not just your questions, in the chat. And I do have a question here, actually, for Vision Fund Ghana, please. And this is from Nancy Thomas. Again, thank you, Nancy, who'd be interested to know if you have seen the need to develop new products in response to the crisis, and if so, what are these products?
Okay, thanks. So yes, we have seen that the critical product that we need to look at is for a recovery loan, which is to address the issues around clients who have gotten their businesses collapsing entirely. You know, either to most of the things that we do, or the lending approach that we adopt is more not to startups largely, but to those who are already in business. But now we have, as I mentioned earlier, we have about a number of businesses collapsing at the moment. So we have to look at a recovery loan, which will help clients of this nature to recover from the impact. So that is one product that we have identified that we are currently working on.
Okay, thank you very much. And Anton, have you seen that sort of thing happening in the sector? New products being developed, or is it more an adjustment of what's already there?
Yeah, so I mean, I think we are in a way in the early stages of the response. So I think we've heard lots of examples of sort of recapitalization loans, people thinking about diversification, organizations sort of, I think a lot of, heard a number of examples of organizations that are putting much greater emphasis now on diversification of income. Certainly we saw that in the survey, that clients that had multiple income sources were coping a little bit better than those with single income sources. But I mean, obviously this is a crisis that's affected multiple sectors, so even those that have diverse incomes have been quite badly affected. We've seen some organizations that are focusing on financial education and business training, and are thinking about helping clients to adjust to the changing situation, looking for new opportunities. But I wouldn't say I've heard many examples of sort of entirely new products, but certainly organizations are thinking about in a way the shifting reality and how to support clients to adjust to that. The one area that obviously is that we haven't talked about yet is the digital side of things, and clearly there are many organizations that have been pushed forward in their sort of digital transition by the crisis, and have been able to use the digital channels much more effectively than they have had in the past. And there's a lot of evidence that digital uptake has increased. But I think the divider here is between those organizations that were already on a transition to new digital products or digitalization, and that's sort of sped up that process, compared to those that hadn't started, which obviously in the short time that we've had, it's not been enough time to make that sort of digital transition. But that's certainly one of the areas that I would have thought that most organizations are much more aware of and thinking about now.
Yeah. Nelly, in fact, you made the comment earlier referring to clients who were fortunate enough to have a mobile phone. So have you, is there any way that you can help us to understand how people with a phone have been able to cope in a different way than people without a mobile phone during this crisis? Nelly, did you hear my question?
No, the network was not very good. Sorry about that.
Okay. So you made the comment earlier about some of your clients being fortunate enough to have a phone, which implies that some don't. Has there been a difference in how people have been able to cope, whether they have a phone or not, especially as so much of the financial services are now becoming or being transferred to digital?
Okay, so thanks, Johanna. We have a population of clientele who do not own telephones. And one of the approaches we are adapting is to work with a service provider who will be able to give our telephones that the network is functional in their locations. In the future and soon, we are looking at how we will be able to serve these clients, disbursing to them directly on mobile platforms in a manner that they are able to run their business as quickly as they plan it to go. Hopefully, we anticipate that we will have a good collaboration with such approach and that they are going to take advantage of the technology that we are going to be using. Thank you.
Right. And I suppose also one has to take into account the different gender use of telephones as well. So it's, again, it's not one size is going to fit all, isn't it? That the financial service providers are themselves going to have to do a little bit of that technology education as well. In some cases, I would imagine. Frank, have you got any thoughts on that?
Yes, of course. Yes, so we are adopting a more holistic approach. So we are looking within as well to look at our normal architecture, to look at how prepared we are even for most of those technological advancements that we want to use in our business. So in-house, our processes and the policies are also being looked at. We're also looking at our own levels of education to ensure that we understand even what we are going to roll out to clients. So we are doing all this, as Nelly mentioned. So the engagement is with a number of service providers, looking at what they have to offer, looking at the type of clients we are serving, and looking at even our own institution and our processes to ensure that this leads to more efficient service delivery. And it also ensures that our clients are also able to adopt some of those services, because we know that we have also seen other MFIs who have adopted some of the technologies, and then it has rather led to clients being disadvantaged, okay, because some of the things that they thought they could provide are not there. So we are more with our clients, engaging them to ensure that whatever we provide meets their needs, and we are able to continue serving them.
Yeah, this pandemic has really accelerated within the sector a lot of the work towards digital. So we've some really beneficial leaps, but we have to be careful not to leave some client segments behind. I'm sure that's something that you give thought to all the time. So we've got another question in the chat. This is for you, Anton. Not sure whether this has been covered, but is SPTF or anyone else planning a large-scale, high-touch household diary project to look at this kind of issue?
Great idea. Not that I know of. No. I mean, I would say yes. I mean, obviously the diaries approach would be great. I know that's coming out of the existing financial diaries work. That there was data being reported early on down in the crisis. I'm not sure whether that's ongoing, but certainly I did see some really interesting reports coming out from the ongoing financial diaries. And I think there are financial diaries in a number of places around the world happening. So obviously those are going to pick up the diaries. I think what we're talking about in the SPTF is less the diary approach, which obviously is the ideal, but more supporting organizations to be collecting information on an ongoing basis about their clients. I mean, what we are seeing is those organizations that are collecting repeat information. It doesn't need to be from a huge number of clients, but just thinking about different segments and really getting some information about how are different people being affected and how are things evolving. I think this really does provide the information for this sort of changes that we're thinking about and we've been talking about, and whether it's new products, whether it's about the flexibility that's needed. And I would say most importantly, it's about managing risk. At the moment, we see a lot of these knee-jerk reactions. There was a question raised about, or comment made from Kenya saying that the sharks are doing fantastically because there's so much demand. There's so much demand because everybody is being risk averse. So a lot of lenders are only lending to their most trusted clients, or those that can really demonstrate capacity to repay. But as we've said, with this increased vulnerability, risk is increasing. So if lenders retain the same risk principles they've had in the past, the impact is that we lend less to people. So we need to adjust our thinking about risk as institutions, as investors, and take a longer term response, because if we take a short term risk approach, the recovery is going to be much harder. And the foundation for the recovery is really to work with clients over time. And good data is what's needed to be able to manage that well.
Yeah, and I think, Frank, you mentioned earlier that one of the products that you are rolling out as a result of COVID-19 and the impact on livelihoods is recovery loans. Now, how do you balance the risk of over-indebtedness on the part of the client and you analyzing your credit risk with this program? Can you tell us a bit about that?
Yeah, Joanna, if you could come again, I lost you along the line.
So recovery loans, these, as I understand it, are loans that you are extending to clients whose livelihoods have been adversely affected during this pandemic. But of course, there's a risk, A, of over-indebtedness to the client, but B, there's your credit risk. How are you balancing these?
Oh, okay. So yes, like you rightly said, there are two areas, and so to balance this, what we are looking at is more about how thorough our appraisal mechanism is, and also looking at our referencing bureau to also get enough information about the client and then the lending patterns to ensure that we don't overly indebt the client. And also, we are also looking at the limitations within the institution to also ensure that this does not also overly expose us. Let me also mention that in all this, we realize carefully that our ability to continue to serve is totally dependent on our ability to survive this crisis and still keep the institution running. So we are trying to ensure that we also overly expose ourselves in that regard. So a very thorough appraisal of the clients who are making demands on us, ensuring that we go into their credit history. And also we are looking critically at the businesses that they are running to ensure that we are not just lending monies, but we are lending to businesses that we know within the current environment and the current happening within the country, they can survive in the business can flourish. So those are all the things that we are looking at before we. This is not just for the recovery, but even existing clients we are lending to. We do all these things to ensure we do a good job in that regard.
Yeah, of course, of course. Okay, thanks, Frank. And I've got another question for you, actually, for both you and Nelly from Sam Mendelsohn. Have you seen any difference, or do you have any insight into whether families and households who are getting remittances from overseas, whether they have fared any differently during this crisis?
Sorry, Joanna.
Okay, yes, our
Sorry,
connectivity
Joanna.
seems to be
I
having a bit of problems. Have you, there's a question about whether you've seen any difference in families' ability to cope if they're receiving remittances. I think we may have to give up on that.
If I heard you right, you want to know how.
So I think I'm going to appeal to our technical assistant here. Can you please perhaps put them on mute? I think we've got a connectivity problem, which is a shame. If they come back, because they look frozen now, if they come back, I'd like to come and ask them for their recommendations going forward in case something dreadful like this were to recur. More lockdowns, etc. But Anton, I gave you a bit of a head start on that. Are there any recommendations that you would leave with this group?
Yeah, I mean, I think the recommendations are to sort of restate what I've said many times in a way, is to start with clients, to start with a segmented understanding of different clients and their situation, to think about how providers can respond to those clients, whether that's around diversification of income, that it's around flexibility, it's around understanding the vulnerability of clients and their risks, and thinking differently about risk as an institution, to be able to recognize, in a way, not to put the whole responsibility onto the clients and their risk. So in the financial sector, we haven't seen many examples of actually any sort of debt forgiveness to clients. The best we've seen is ending penalties, but in a way, we expect clients to repay. We expect the FSPs to not to lose their capital. We expect FSPs to repay their investors. We expect MIVs to repay their investors.
Yeah.
In other sectors, we're seeing forgiveness. We're seeing governments bailing out businesses. We're seeing governments giving grants to individuals. It feels like in the financial services, in financial inclusion, we're putting too much of a burden onto clients. And I think, given the vulnerability going forward, we need to start taking a longer term perspective, recognizing the vulnerability, adjusting our expectations around risk, and that needs to be supported all the way through the chain. So we can't expect FSPs to take on the risk themselves. Investors need to be sharing that in some way.
Okay.
So I think that will create the space to be able to take these creative solutions.
Okay, thanks, Anton. Very, very sobering words. And Frank and Nelly, if you can hear me, any last and very brief, I'm afraid, recommendation from you as to how to help and support clients through a crisis like this, were it to happen again?
Okay, so yeah, briefly, I think that there's the need for constant engagement with clients, with all the other stakeholders as well, to clearly understand what they are going through, to be better able to serve. Also, the funding bodies, those who support MFIs, also need to understand the situation so that they will give the institutions a bit of room to be able to help. Because if there's pressure from the top, it is normally gets translated into clients and all that. So we need to make sure those things are well looked at.
All right. So I would also say that one other area would be staff capacity, because this is also a new era for the team of staff. And so once we are faced with such challenges, how are staff brought to speed to some of these challenges? How are they able to relate well with clients in
Thank
such
you.
situations, such that in the end, we don't end up harming the client, but we still serve
Okay,
their
I'm going to have to stop you there, Nellie. Absolutely, absolutely. I'm sorry, we've run out of time, but that's it. Look after the staff and look after the client. So thank you all very, very much indeed.
Thank you all for having stayed with us so far. It's time for a little break. Maybe you want to stretch out your legs, go for a walk. We'll be back in 15 minutes.